You may have heard interest rates are rising. It might make you think, should I really buy a house right now? Here's the scoop. Interest rates are going to go up. They're already going up. And the reason for that is that we have to kind of go back a couple of years. When the pandemic hit, the Federal Reserve stepped in and single-handedly brought interest rates down to historic lows. They did that to keep the economy moving. And they did that on several different areas. One of which was they dropped the Fed funds rate to near zero. But more importantly, they started purchasing mortgage-backed securities. And this is the key because the media is going to tell you, and it's going to happen here soon, that the Fed is increasing interest rates. Well, when they do, that doesn't directly impact long-term mortgage rates. But what does are mortgage-backed securities. And the Federal Reserve has been purchasing mortgage-backed securities in such a huge, significant amount that it has kept interest rates down just by that action. So the Fed, in addition to increasing the Fed funds rate, they are going to start slowing the purchasing of mortgage-backed securities. And unless there's another global buyer that's going to come in and continue to purchase mortgage-backed securities at the level that the Federal Reserve was doing, interest rates are going to go up. It is what it is. But here's the good news. They're still at historic low levels. So I've been lending now for 26 years. And over that 26 years, I've seen interest rates anywhere from 8% to 2.5%. And people still buy homes because we have to have a place to rest our heads, to raise our families. And overall, over time, real estate is still a great investment and it builds wealth in this country. So a lot of times people get freaked out when this media just like pounding this stuff in our heads, right? Interest rates are rising. Okay, well, what does that really mean to you? Well, we have a fantastic tool called Mortgage Coach where we can show you what interest rates look like today. And if they are planned to increase, let's say by 1/4% or 0.5% or even 1 full percent, what does that really mean to you from your qualification as well as your monthly payment? But even with that, we also will show you that if you choose to wait to buy a house until interest rates go back down, the cost of waiting. Because our market has been appreciating at 20% per year, year over year for the last couple years. 20%. That means if you bought a $400,000 house last year, that house is likely worth $480,000 today. That's an $80,000 spread from just appreciation that builds net wealth over time. So let's say it's not going to continue at 20%. We don't believe that it will. It can't. It will likely slow down. So what? Let's say it appreciates at a 10% rate right now for 2022. Maybe it will, maybe it'll be higher, but let's just say 10%. If you're buying a $500,000 house this year, and with a 10% appreciation, you wait to buy next year, that $500,000 house next year is likely $550,000. And it's likely that interest rates are going to be higher next year. So why wait? So when you ask yourself the question, should I wait to buy a home until interest rates come down? The answer will be, get the facts based on your particular situation. And the answer is no, don't wait. Buy now. If you want to buy a house, this is the time to do it. My team and I are here to walk you through your particular scenario and dive deep into what the numbers look like. Get the facts, and you will be empowered to really move forward with buying that home and feel comfortable with your financing options.